Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within company reports. And let's just say Lobo EV Technologies is giving us a peek behind the curtain this time, and it's not exactly a smooth ride for potential investors. We're diving into their latest filing to see what's really cooking. So what exactly is this report all about? Well, Lobo EV Technologies Limited is a company operating in the electric vehicle space, and they filed a Form 6K. This type of filing is essentially an update for investors, letting them know about important things happening with the company. Think of it like a quarterly check-in, but with a slightly different flavor. Now, the big news here is that Lobo EV Technologies is giving us their 6-month interim financial statements. This means we get a look at how the company has been doing financially over the first half of the year. It's always crucial to see these interim numbers because they can show early trends and potential problems before a full annual report comes out. Let's jump straight into the numbers because that's where the real story usually is. We're looking at their unaudited interim consolidated financial statements as of June 30, 2024. Now, this is where the company explains what's going on with those numbers. They give us an operating and financial review and prospects. This is their chance to tell us the story behind the figures, what drove the changes and what they expect to happen next. Looking at the overall picture of Lobo EV Technologies from this filing, it seems they are in the early stages of their business. As a foreign private issuer from the People's Republic of China, they are operating in a very competitive and rapidly evolving electric vehicle market. The fact that they are filing these interim statements indicates a commitment to transparency, which is generally a good sign for investors. However, without the actual financial tables here in this specific filing text, it's difficult to give a deep dive into specific numbers like revenue growth or profit margins. What we can infer is that they are likely focused on scaling their operations and securing their market position. The operating and financial review and prospects section would normally be filled with details about sales, expenses, and future plans. For a company in the EV sector, key concerns would be production capacity, battery technology, development, competition from established players, and regulatory changes. If their operating expenses are high relative to their revenue, it could indicate heavy investment in research and development or manufacturing, which is typical for an EV startup. Conversely, if revenue is growing but profitability isn't keeping pace, investors might worry about their long-term financial health. We also need to consider the broader context of the electric vehicle market. It's a booming industry, attracting significant investment. Companies that can innovate in battery technology, charging infrastructure, and vehicle design have a strong potential for growth. However, the capital required to succeed in this industry is enormous, and many startups struggle to bridge the gap from development to mass production and profitability. Given that the filing doesn't include the actual financial statements themselves, but rather references them as Exhibit 99, we can't directly analyze specific line items like revenue, cost of goods sold, or net income. However, the very existence of this report and the accompanying financial statements suggest that Lobo EV Technologies is moving forward with its reporting obligations. As an investor, the essential next step would be to scrutinize Exhibit 99(1) very carefully. Look for trends in revenue generation, understand the cost structure, examine any debt or equity financing, and assess the company's cash flow position. For instance, if their cash burn rate is very high, meaning they are spending a lot of money quickly without generating enough income, it would be a significant risk. On the other hand, if they are showing consistent revenue growth and managing their expenses efficiently, it would suggest a stronger underlying business. The prospects part of the review is also vital. Does the company have a clear strategy for the future? Are they entering new markets, launching new products, or facing significant new competition? These are the questions that will influence future performance. In essence, this Form 6K is a snapshot and a very important one for understanding a company's trajectory. While we don't have the granular financial detail within this specific text, the filing itself tells us that Lobo EV Technologies is providing investors with key interim financial data. The critical work for any investor now is to delve into those detailed financial statements and the accompanying management discussion to assess the company's true operational and financial health, and whether its prospects align with its current performance. So what's my take on Lobo EV Technologies based on this filing? It's too early to say for sure without the full financial details. However, this filing signals that they are actively engaging with investors and providing the necessary disclosures. The critical factor for their success will be their ability to execute their business plan in the highly competitive EV market, manage their finances prudently, and clearly articulate their path to profitability. The risks are inherently high in this sector, but so are the potential rewards. Alright, that's our initial look at the Lobo EV Technologies Form 6K. What are your thoughts on what this filing might imply for the company's future? Let us know in the comments below. If you found this explanation helpful, please give it a thumbs up and subscribe for more in-depth corporate filing analyses. Make sure to join our Discord community. It's linked in the description for more discussions like this. Thanks for watching, and we'll see you in the next decode.